Dear traders, welcome. It's time for another time-lapse video. Someone was asking, does the same apply to the lower time frames? Yes, of course it does. Today we will look at pound dollar on a 30-minute chart, so short term. Just remember, the whole market causality as presented is valid. That means we are not simply trading against some random money flow on the lower time frames, yeah? Whenever we trade one of the defined setups, such as a move towards an MTS, a move towards an OST option strike target, or we trade a squeeze move in one direction, or we trade a 4-hour reversal on the lower time frame, or an order gap zone fill, or a post stop hunt move, etc. Yeah. So it's not that we use these indicators on the lower time frames as a generic entry point. That would be too simple. We don't do that. Of course, on the higher time frames, when we have like a lot of the money accumulation, like shown in the other time-lapse videos, this dominates. Watch those videos. You see, for example, Aussie dollar long is coming in, so over days and sometimes weeks, it goes down against them. And of course, on the lower time frames, you see those positions. But what we do not do is like just randomly trade against the newest money flow. You always take it in context and always take into account the net money indicator, okay, the overall allocation of the dumb money. That's how this works. Anyways, let's get started. So let's do the time lapse. Let's see all the things we saw in the MK block, how targets get taken and how the smart money operates even in the lower time frames. Just remember, the lower time frames, there is a bit more dumb money tolerance. So sometimes we see that the dumb money can also slightly win, or there's a dumb money switch in the dumb money flow. We're gonna see that now. And also take into account that the scale here of the current money position changes according to the highest value. Okay, so sometimes it looks a bit as if something is changing after the fact. That's not the case. The scale is changing because either new money entered the market and makes the previous bars look smaller, or old money which was in the market left and therefore makes the remaining position bars look bigger. And that's what you see a bit more in detail here in the time lapse. Okay, anyways, let's get started. So we are here in April. Pound dollar, we have an MTS below the price, and let's go. Boom, MTS gets taken, no surprises there. Some shorties leave the market. Some shorties are entering in the market, so the price goes up. Some longies came in, which got served with a down move, but here, boom, shorties took over, okay? Shorties create a squeeze, therefore the big up move. The scale is high, okay? That's how this works. Some shorties leave the market, therefore pull back down. Some longies even coming in, a bit of a dumb money switch, but then again, MTS above the price. Longies got served with down moves. Some shorties entering. MTS boom is taken. Took the order gap zone, pull back down. Shorties coming, so up move. More shorties coming. So bullish bias. Expanding squeeze against the shorties. There we go. High gets cleared several times to kick out the shorties with tight stops. Boom. There we go. Expanding squeeze therefore went up further after a little pullback. Shorties get served. The high gets cleared. Some shorties got kicked out. Some longies coming in. So pull back down. MTS. STS get taken, order gap zones get filled, MTS is taken. You see, it's the same things, basically. But, boom, there you go. Shorties come in, they get kicked out by clearing the high. Down money switch to longies, so immediately back down. There is no way you can see these things on a naked chart, guys. I have to say that again. You need to see the data. You need to understand. Look, MTS gets taken. Overall, down money switch to longies. Okay, longies are coming in, so it went down. This can result in a squeeze, but no, the longies are also kicked out. Look, they boom down against the longies. serving them, okay, expanding squeeze against the longies, there we go. This dominates everything else. Order gap zone gets filled with a pullback, shorties are coming in, so they do a grail pattern here. See that often. If more shorties come in, they could go for the MTS and take the order gap zones on the way, but that needs to happen. Look, longies come in instead, so they go down. Market is empty. Shorties and longies are kicked out.
Incoming mail.
They don't go up if no shorties are selling, you see. MTS, boom, taken against the shorties. These are the best trades. Sometimes when you have like the dumb money on the side you want to and you have a clear target within reach. We have seen it many times. Look at the Aussie long trade from last week, for example, by the way. Okay, anyway, so longies are coming in, so they clear the low, expanding longies, so they're going after them, taking the short-term stops. You see how that works? Long is leaving, so therefore pull back up, order gap zone taken. You see how they take the order gap zones in between as a side deal. MTS got taken, immediately back up. Longies are coming in again. Some shorties, some dumb money flow changing. So sideways. Long is coming in, they get down, they're going down against the longies. They're trying to make a pullback to take the MTS against the shorties. Yeah, they can take the MTS. Yeah, boom, there we go. MTS taken. Order gap zone filled. Long is coming in again. Expanding long squeeze, so down move. These are squeeze trades. Expensive entry, but tradable. Boom, short-term stops are taken out, all of the blue lines. Bang, bang, bang. Pull back against them on the shorties. Clearing the high. Long is coming in, so going down again. Order gap zones are opening up, short-term stops are taken, order gap zone filled. Some shorties are coming in, so order gap zone filled completely. New order gap zones opening, taken, boom. Shorties dominating, so order gap zone on the upper side filled. Shorties left after the aggressive move against them. Longies came in, so lower order gap zones filled. MTS taken against the longies. These are all trades, yeah? You can see them in the MK block. Shorties coming in, so up move. A bit empty there. We like to have a target. We do not just randomly trade like empty moves. Shorties dominating, shorties creating a squeeze. So the smart money is going up against them. The sellers are in loss. This is bullish, of course, as we know, yeah. The squeeze gets fueled by new shorties, so but then the shorties are leaving, as you can see, so they go back down. Long is coming in, dumb money switch. It's a bit fast, maybe I should do it a bit slower. Again, switch, so this MTS can be taken against the shorties. Boom, a shorties leaving the market again before that happens. So they're waiting for new shorties, some shorties are coming. Luring modes, they're waiting for dumb money positions to see what they take next. Boom, little MTS taken, shorties coming in, upper MTS taken. This is one of the good trades, yeah? We actually traded that if you go back. Lower MTS against the longies got taken. Again, longies coming in. Shorties dominating, high gets cleared. Expanding squeeze against the shorties. They clear the high, so some shorties are kicked out, but again, shorties coming, expanding shorties. Squeeze line points upwards. Boom, high gets cleared again against them. Some longies coming in, so dumb money switch. Taking the lower order gap zone, new MTS above the price, but market is empty. Boom, taken. Nice long trade there. Some shorties came in, so they went above the high. MTS, but shorties in the way. Shorties need to get kicked out. Expanding sellers, so they take them out. Boom. We see the downward move in the squeeze curve, so shorties got kicked out. Shorties coming in again, fueling the squeeze. These are fueling PBs, position bars, so they're going up against those sellers. All these dumb money sellers are in loss. You need to prioritize that scenario over anything else. such as the MTS. That's not important. The squeeze is always stronger than an MTS. I can take it later or never. Look how they always take SDS and auto gap zones along the way. Okay. So yeah, nice stuff. This is nothing new really. I mean, at the end of the day, we have seen all that stuff before, but here in the time lapse is always very interesting to see. So understand, we are not using all the indicators in a generic way. We look for very specific situations, such as
Incoming mail.
the dumb money being short and we want to trade towards the upper MTS, yeah? Or, you know, short is getting kicked out, we want to trade towards a lower order gap zone, etc., etc., yeah? Or here, the option strike targets, boom, get filled, get filled. This is how this works, okay? And always also check the higher time frames, because there you get clarity what the overall mode is. When in the end we had this big squeeze against the shorties, this is a squeeze you see even on the day chart, and you know that it dominates, so there you can enter expensively into the market and buy against the dumb money sellers. Yeah? As simple as that. So remember, look guys, ladies and gentlemen, I have several videos planned, but these days around the internet you find all this price action based trading approaches, naked chart trading approaches. But as you can see, what chance do you really have consistently? If you just see the naked price, you don't know anything. You don't know where the dumb money is placed. You don't know where the MTS are. You don't know where the order gap zones are. You don't know where the short-term stops are. You don't know where the long-term stops are. You don't know where the option strike targets are. You don't know whether we're in a squeeze or not. You don't know whether these are fueling position bars or not. You don't see when the dumb money is leaving, so everything collapses again. I mean, it depends on that, as you can see. The smart money algos are very responsive to what the dumb money does. Sometimes they lure around to see on which side they go. Like you remember, they waited for the shorties, then they took the upper MTS. The chart doesn't tell you that. People claim all kinds of things, but that would be easy if you could derive these things from a naked chart. You can't. That's why I don't like when all these price action traders use the term market structure for how the chart looks like. Whenever I say market structure, I mean the actual positions, the data. Okay, that's what I'm referring to. What's actually happening behind the curtain. I'm not talking about a naked price chart. Okay. Otherwise, you could just simply create an EA which captures all these price patterns, and that's not possible in terms of consistency in the long run. We know that. Okay. So please understand that in the future I try to elaborate also on those topics. But this is really what you need in terms of tools to be able to decide how much value a trade setup has, what the bias is. We trade what we see, not what we think. All the best.